안녕하세요, 자이언트 시청자 여러분. 저는 매일경제증권부의 정재원 기자입니다. 최근 홍콩에서 삼성전자 주가를 2배로 추정하는 ETF가 출시됐죠. 삼성전자 주식이 하루에 3% 오르면 이 ETF는 6%가 오르는 구조인데요. 오늘은 아주 특별한 손님을 모시고 인터뷰를 진행해 볼 텐데요. 오늘 모신 게스트는 이 ETF를 출시한 CSOP 자산운용의 부사장 왕이 CIO님입니다. Hello, welcome to South Korea.
Yeah.
Thank you
Thanks for
for
invitation.
thank you for taking your time today.
Yeah.
So, can you briefly introduce yourself and about your company?
Yeah, sure. My name is Yi. I'm CIO within CSOP Asset Management, and CSOP Asset Management is a Hong Kong-based asset management firm. So we're specializing in ETF products in Hong Kong. In terms of number of products we launch, roughly 60 products offered in Hong Kong market and Singapore market as well. So there's several space we're doing well. For example, leveraging inverse space within Hong Kong. We currently representing 98% of market shares. In terms of AUM, I think we are ranking number 2 in Hong Kong, beside the government 2800 fund, so which is a Hang Seng Index ETF. We are in total AUM under asset management is ranking number 2 within Hong Kong right now. Yeah.
So, you said your company is ranking number 2.
Yeah, in
Which
terms
one
of
is-
total AUM.
Okay.
Yeah.
Which company is ranking number
Hang Seng Asset Management.
Okay.
Yeah, it's a legacy fund. So it's
Yeah, right.
back to 1997. So it's a Hong Kong government rescue fund, equity fund, and they converting it into a ETF products, which is currently largest Hang Seng Index ETF from the market.
Okay. Let's get started with the Samsung Leverage ETF.
Yeah.
It's quite interesting, and many of the Koreans were shocked because Hong Kong launched this kind of product earlier than the South Korea.
Yeah.
So why did you pick Samsung Electronics?
Yeah, before that, we within this year, the Hong Kong regulator actually issued a new regulatory guidance, so which allows a structured exchange traded products to be launched within Hong Kong Stock Exchange. So single stock leveraging inverse products falls into this category. So at the very beginning, we pick up several US names which were very popular in US markets. Like NVIDIA, Tesla, Coinbase, MicroStrategy. And based on the new guidance, it only allows foreign stocks to be launched as underlying. And there's a market cap threshold. It only allow large cap, mega cap type of companies to be launched. So within Hong Kong, we think about what else we can do, what else other markets we should launch. We find that Korean investors particularly like single stock leveraging invest products.
Yes, right.
And we are considering like Korean market single stock names. Based on our understanding and research, we feel that Samsung has been held by a lot of Korean investors. Doesn't matter from retail, institution. I think it's a very good branding, or it's a very good like recognize the names, no matter, of course within Korean, but also in Hong Kong as well, in Asia. Because our product is aiming for Hong Kong local and also Asia like investors. So I think that's the reason why, and also Samsung is a representing name for Korean market. Yeah.
So it was impossible to make a leverage ETF for like SK Hynix or any other Korean stock, right?
We have been recommended, and those two names have been repeatedly on our conversation with Korean investor. Based on this time, we have a roadshow trip within Korea. So we will seriously consider those two options, and hopefully we can make it happen. Yeah.
Okay, so after you launching the Samsung Electronics Leverage ETF, the Samsung Electronics stock have got more volatility than before, right?
Yeah.
At the beginning of the July, the Samsung Electronics soared like 5% a day.
Yeah.
So did you expect this kind of phenomenon or situation? Yeah.
I don't think the product itself have too much impact currently Samsung stock performance. We just launched the product. The size of the AUM is relatively small, and the performance of underlying stock is more driven by the company's like fundamental news or is that any financial release of the listed company. So it's not at the stage of one particular product will influence the underlying stock market.
So can you suggest the outlook on the Samsung Electronics also?
In terms of a single stock, we are looking at the Korean market in general, I think. So we do observe that previously Samsung stock under a little bit pressure, to some extent linked to semiconductor area as well. We have several products invested in Japan, invested in Korea, invested in Taiwan for semiconductor area. They generally facing similar issues, and also recent chaos of tariff thing has bring quite a lot of volatilities to the markets. But good sides I observed from, for example, from China. So last year we see quite decent import figures. It's keep climbing up for the semiconductor chips imports from China. So the exporter bring up the volume is normally coming from Japan or Korea. On that side, especially when we talk about like China AI evolution, they probably need to store more chips and IDCs and this kind of like infrastructure preparations. So I'd say probably we're looking at a volatile recent market, but from the outlook perspective, the world is evolving and the technology is evolving as well every day. So you never know. So for future next 2 or 3 years, maybe not US leading the AI evolution anymore. It's turning to China or turning to other countries. We never know. But if that's the case, I think Samsung is still working as a very good like substitution of NVIDIA. And in terms of AI trend, we have been observed for previous 2 or 3 years. The only reason being NVIDIA being put in the position is because of the constraint of the OpenAI. So OpenAI is only can be trained by using the tier 0 chips, which is only can be provided by NVIDIA. The DeepSeek come out. So the good thing for DeepSeek is it can be trained by using tier 1 chips. It could be from Samsung, could be coming from like AMD or other chip makers. So give everybody a chance. Probably you can participate in the like tech evolution competitions. So I think in terms of outlook, we hold like relatively optimistic view. Yeah.
Is it possible to suggest some kind of special band for the stock? Is it hard?
We normally don't give particular target price. Yeah, so because we are not a security house, we're generally analyzing what's the general trend of particular markets. Yeah.
I was impressed with the fact that you guys also have the Berkshire Hathaway leverage ETF because most of the leverage ETF are investing on Tesla or like Nvidia or Robinhood, which has a big volatility. But Berkshire Hathaway is not kind of those stocks. So why did you pick Berkshire Hathaway also?
There's 2 reasons. That's a very good question because Berkshire Hathaway is a very famous company because of Warren Buffett. In Asia. And in terms of marketing, so we don't need to explain too much to the investors. And also, when we launched Berkshire Hathaway, we only launched 2 times leverage version, and we don't do the 2 times inverse version. The reason being is if you check we do the historical performance test, and the people believe Berkshire Hathaway performance normally believe the capability to go through the economic cycle or the crisis cycle. So it's a little bit hard to do short Berkshire Hathaway stock to make money, right? And the leverage version relatively, I think, gave the opportunity to the investors to accumulating or enhance their returns on the long positions. In terms of volatility thing and also its performance thing as well. So if a single stock leverage inverse product, if the volatility is too high, that which means the corresponding cost will be high. Berkshire Hathaway, on the other hand, so if you're taking leverage, the cost is relatively much cheaper than Nvidia or Tesla, those kind of stocks due to the low volatility. We think it's a kind of a alternative. It's a different angle. People buying Tesla, Nvidia is more for trading purpose. People buying Berkshire Hathaway could be realize they are long view or long positions or taking more leverage on their investment holdings. Yeah, that's the purpose of a long-term Berkshire Hathaway.
Okay, so Warren Buffett was saying that he will be refining from the CEO this year. So what's your outlook about the Berkshire Hathaway stock?
I think he's a kind of a symbol of the company anyway. It could have like from image perspective, people will still see this is running by Warren Buffett, but step down as chairman. Based on previous several years, we're already seeing that Berkshire Hathaway Investments has been managed by the team rather than rely on one single person. So the business model is already there, so which has been proved as a very successful story for a single stock company, to be completely frank. Yeah, market could have concerns, but also it is reflecting that current performance of the Berkshire Hathaway is reflecting, okay, there's no big concerns for the company.
Okay. Can you suggest some strategy to use the leverage ETF for retail investors? Because it seems quite risky for the retail investors.
Yeah, for leverage and inverse, we give a lot of ways you can use it. And of course, you need to have a good understanding of the product before you get into the product, because it's definitely riskier than the normal stock holdings. So in terms of strategy, people use it in different ways. For example, you can use it as a hedging tool, or you can use it as a speculation tool as well. So for example, for the speculation, some news coming out from the US, especially during the midnight, because US market is not open yet. So you can trade beforehand. Then the winning rate, I think, is relatively okay. We're back testing that. If a big announcement happening during the midnight, the market is not, it's still be performing, it's not performing enough. Then for this kind of a scenario, you can get a little bit positions that just bet on the continued extension of the performance of the day. However, for some of the investors, I think they can use other derivative. If you are option trader, for example, then you could use like leverage inverse fund as a hedging tool. We saw some high net wealth investor doing so. For example, within this year, Tencent, Alibaba, like China tech names, or Xiaomi. Yeah, there's one investor buying options on Xiaomi and long options, then make quite a lot of money. But at the same time, you don't want to sell on the secondary market, because for the option trading, then it's a huge like spread for the bid offers. So he wants to continue to hold that position, but correspondingly, he wants to hedge themselves. So what they do is just buy inverse like Hang Seng Tech. So every single time we see decent rally for the Hang Seng Tech, we see quite decent inflow into inverse product. And people, retail investor or high net wealth investors becomes more and more sophisticated to use it. Someone telling me they are using the contract difference for investment, but on another side, they use leverage and inverse product to do hedge on another side. I'm not recommending cross-platform thing. So yeah, for a lot of retail investors, just stick with normal investment strategy, normal market, I think is sufficient or more than enough to do. But I just give you some ideas. Some people using the products for different purpose. Trading strategy wise, I think a lot of like quant trading, they have signals, they betting on the trends, intraday trading. So that's the reason why our turnover, for example, in Hong Kong Stock Exchange, our products, they have the rank for all the ETF products trading per day. Our products, normally there are 5 or 6 products ranking top 10, or in good days, probably we have 7 or 8. So that's the reason why the trading volume is quite high for the leveraging inverse products.
This year, the Korean stock market gets forward, and as well as Hong Kong market. So What's the reason of this phenomenon and what's your view about the future?
I think it's linked to things. One is, for last 24 months, I would say in 2023 and 24, the Max 7 investments becomes most crowded investment in the world globally. Keep ranking number one, which is kind of like, as far as I can remember, there's no one theme or one trading ideas has been holding that position for so long. All of a sudden, position has been shifted. And as I mentioned, US exclusion or US owning theory has been challenged by the early year of DeepSeek coming out. So people start to look at other things, just in case, because they have, for example, you have positions in NVIDIA or in Apple or in Microsoft or those kind of like leading names within AI evolution, then you already make a quite decent amount of profits. And the second reason is with the new president in US, Donald Trump in place, so people feel that a little bit step back, I will need to hold my investment, either you already make quite a lot of money, or you're concerned about the future, like outlook for the US market. Then based on our conversation with institutional investors like corporates, even tech companies, all in China, but in Asia, so the general view they give out is they will hold their actions and see what happens for the US policy. It's not only about tariff, it's regarding the attitude towards tech, towards a lot of things. So give other market a chance to revalue, because previously, for example, China market has been underweight, and a lot of articles and analysts will say, okay, a lot of stocks within Hong Kong has been running with very low valuations. But our view is if you're running a relatively low valuation, then if you're expecting a correction of valuation, there must be a reason. The reason could be policy change, could be tech evolution. My personal perspective, I would say tech evolution is more robust, because it's a link to fundamental. If it's a helicopter style, like throwing money to the market, and you can create like a temporary booming market, but on the other side, you need to pay back sooner or later. That generally happens to all the markets, not only in US, but in China as well. So recently we see, the rally has began since DeepSeek come out, but interrupted by the tariff. And let's see what's gonna happen to later stage. How is the tariff can be landed, and what's the new bills in US gonna impact to the market. Then people will come back to say, what exactly the corporate is doing. But right now, people is trading on the big stories. But afterwards, if the macro level or policy level come down, then people will come back to say, whether it's a good company or bad company, or they are making money or they are generating decent growth. So I think due to this kind of reasons, so people have concern of US, the dollar weakening. Dollar weakening is generally good for the emerging markets previously. There's for those kind of reasons, Hong Kong and Korea and other markets kind of impact from the global leader. And asset allocation wise, people will think about, do I need to invest in other markets?
So there is a meme about the taco. How do you assess about this meme? Because these meme creators seems like they are overlooking tariff situation.
To be completely frank, I think the US president is pretty random. I don't know whether he has a team to run the Twitter, because we need to monitor his Twitter all the time. Sometimes he's even posting the tweet during the midnight and announcing big stuff on the Twitter and quite a lot of these kind of activities. Always check out, I think, is kind of linked to concept bluffing, but he's always kind of create a big news. Trying to gather a lot of attention from the media, from the investors. So not necessarily all the time he will get positive feedback, I would say. And also it's not always people will follow his logic. And if particularly Donald Trump asks some countries, just accept my tariff, otherwise I will lift it up. But not all the countries will accept the tariff Yeah, the negotiation is still on, and also he delayed the recent deadlines. Also, he claimed that there will no more delays for the 1st of August, right? Yeah. So we never know what he's gonna do, but his ultimate goal is just get what he wants. But whether his announcement can be delivered or not, I'm not quite sure whether is that important for him. To be completely frank, yeah.
Let's back to the portfolio view for the retail investors,
Yeah.
because these days the uncertainty in the stock market
Yeah.
is getting more bigger.
Yeah.
So in this period, what is recommended to buy for retail investors?
I can give you some ideas because we see different trends in Hong Kong market. So there's a large flow into Hong Kong markets within this year for onshore China investors. So the cumulative stock holdings from onshore China investors to Hong Kong stock is above 4.5 trillion Hong Kong, which is equivalent more than 500 billion US dollar terms. Within this year is inflow nearly 90 billion. So which is quite decent. So there's two things they are buying. One is tech. Another thing is high dividend stocks. So it's representing completely two kind of stock investments. So people worry about the future, people worry about uncertainty of the market, then they will go for quality companies, health balance sheet, no credit issues, paying good dividend, not too much volatilities, and they will buy in dividend stocks. And to extreme level, if you talk about cross asset class level, then we see that people buying US treasuries, even short-term debts, and fixed deposits, and also money market funds as well. So right now it's a kind of diverging in terms of retail investors. So another very interesting theme retail investor would like to hold is gold. We see quite decent amount of sales in gold, not for financial products, but also physical gold bars in China as well. So people will buy, if you are conservative retail investor, you will think about gold, deposit, treasury, this kind of thing. If you are more aggressive investor, you will think about AI evolution. I want to make fortune. I want to double up. I want to triple up. Then I will bet on the tech thing. And even more aggressive, they will bet for example, Popma is being particularly popular as a Chinese IP company. And if you're buying from last year, I don't know, increased by 10 times or something like that. There's a lot of things you can pick up, and people will choose one or another for a reason, or even combination of this. So when we talk to other markets, and I think the general feedback is similar. So one side, people still buying AI and taking leverage of that. On another side, people were buying this kind of structured products, paying cover calls and paying decent yields. And on extreme side, it's just saving in the bank and doing nothing and just receive the interest rate, because currently interest rates in US dollar terms is still attractive.
And how do you think about the crypto fab and the Bitcoin? Because you guys also have the Bitcoin ETF also. So what's your opinion about that?
I think it's, from my personal view, is Bitcoin performance or recently is quite hot. Is about a US dollar stablecoin thing. In terms of market size of stablecoin is, if I can remember, it's 250 billion something. In terms of total size of the USDT thing. Bitcoin or Ethereum, we see an increasing demand for cryptocurrency for high net worth private bank. The reason being is due to two things. One is one big topic is the dollar. So when people talk about the dollar, I think a lot of trading happens in April. So the largest flow is selling US and flow back to Europe. The reason being, I think, is due to Ukraine and Russia crisis. So a lot of money has been go into US market because US has nothing to do with the local like geopolitical conflicts or the war, you see that. Then if the war comes down, then the money flow back naturally. When people talk about like the dollar, they don't want to trust the dollar anymore because the fiscal positions, you are over leveraging, especially you're gonna have a big bill, how can you finance yourself? Then people have concerns. We talked to several like institutional investors as well, so they concerned, but they don't know where's the second like substitution market to go. This could ending up with a scenario like I'm selling my dollar position and I don't want to go to Europe, I don't want to go to Japan, I don't want to go to China as well. So what else I can buy? Probably currency-wise, you have the substitution from gold. Crypto is another option as well. But market size-wise, gold is representing 15 trillion or 20 trillion, something like that. And crypto is just 2 trillion-ish. Or probably because of the recent rally is a bit more than that. But if you compare it with a traditional equity and traditional bonds, we are talking about nearly like a 300 or 400 trillion thing. So small portion of that move to a small market, then we're creating a decent rally of that. So especially for gold is representing quite a lot of like central bank behaviors. For example, China central bank is buying PBOC, Poland is buying, and India I think is buying. So they are representing decent like net inflows into gold. Crypto wise is similar. People if they have concerns, I just diversify a little bit, like 2% or 5% of my portfolio to crypto holdings. That will create quite decent like holdings of crypto investments. So I think that's due to this kind of reason. But if you look at the recent market, then people flow back to US.
Including stock.
Yeah,
USDC,
including stock. And correspondingly, the gold performance and the crypto performance, the upward trend has been stopped, right? So recently it's a trading into this kind of mechanism. Yeah.
If you want to say something more, and if you want to say something to Korean investors,
I think it's more to do the synergy between Korea and Hong Kong market as well. Because we learned the leveraging was from Korea. Korean market is being the first market, I think, in Asia introduced leveraging with products. But due to the market is evolving. Because the Hong Kong market right now, I think more innovative. For example, they allow like EV virtual asset exchange, virtual asset license, and allow the structured products to be listed. But compared with US, both Hong Kong market and Korean market is also lagging. So if you look at the US market, they even allow like a CTA ETF, hedge fund ETF to be listed. So there's a long way to go as well. So in terms of evolution, but we need to consider the fact that we need to protect local investors, and ensure that they know what they are investing. We can't say, we can copy other markets simultaneously. If they can do that, I need to do that. It's not working in this way, I think. Take Hong Kong market quite a while to take off in terms of leveraging with product offering. At the very beginning, we can only do the offshore index. We launched India index, but afterwards, after more than 1 year, nothing really happened to the market. And even for the Hong Kong index, there's a huge competitions, but actually the AUM accumulating slowly. However, there's a trigger point, happens the education for the investors and also usage shoots up. Then people start to use it too for their investment. So every single market has their own facts, conditions to adopt new instruments, new regulations. So we need to be prepared for that. We can offering this kind of products in Hong Kong market is more than welcome for Korean investor to analyzing the product and use for their investments, and also give us suggestions what kind of products we can do in Hong Kong market, especially for Asia time zone. Because the reason being we launched this kind of product is to solve the problem. You don't need to do the overnight trading. At least the product you are trading is in line with your local investment or make your investment easier. For example, Robinhood or Blue Ocean, they trying to link 24 hours, but got some problems. And then people switch to US time trading. We have been receiving quite a lot of suggestions for us to launch convenient products for investors. I think that's all I want to share with you today.
Okay, 오늘은 CSOP 자산운용의 왕희 부사장님과 함께 대화 나눠봤습니다. 괜찮은 시간 되셨나요? 오늘 시청해주셔서 감사합니다. 다음에 또 뵙겠습니다.